Welcome, members and guests. This is Joanne Obata. I am presenting the disclaimer on behalf of Hanny, who's the president of our investment club. We are a better investing model club open to the public. All of our meetings and stock studies are virtual, allowing us to have members from around the world and the US, including Canada and China. Guests, you will be muted during the meeting as observers and will have an opportunity for questions and comments once the meeting ends. The stocks presented today are for educational purposes only and are not intended to be a recommendation for buying or selling any stocks. We ask that you conduct your own review and analysis of any company of interest before making an investment decision. The views expressed are those of members and do not necessarily represent those of Better Investing. This meeting may use products or services not endorsed by Better Investing or the club. This meeting is also being recorded for future use and will be posted to our YouTube channels. I think that's it. So, Hanny, would you like to take it from here?
Actually, I'm having some technical difficulties.
I
can't see the screen.
Okay. I think the next part is the stock study. We can just tell you what it is. Do you have your own documents?
The next one is a treasurer's report.
Treasury
report. Treasury report. Okay, that's
Henny's there. Oh, good. I'm going to make Matt. Tom is the presenter. He's giving the treasurer's report.
Oh, okay, Thompson. Okay.
Yeah. Okay. Yes, Tom, we can see.
Okay, good. So I forgot about this. I apologize, until about 10 minutes ago. So I quickly ran through and had $1,000 and did a new valuation as of the prices as of today. These are the stocks we have. Mostly mid-size. A few, Comcast, Facebook, and Disney kind of mega caps, and then Schwab is a large cap, so it doesn't look like we have any small caps in the portfolio today. We're sitting on a lot of cash, which is between 25 and 30%.
Tom, well, you weren't here last month, right?
Right.
I did the report for you, but I think I forgot to. We sold IPGP? I believe we voted to sell that, did we not? Or does anybody remember if we sold it? I think we did. So we should probably this month sell that, and then we'll actually have more cash.
Okay. Let's see. Voting.
Yes, this is Joanne. We did sell IPGP. We sold it last month. Oh no, wait, it didn't pass.
Oh, okay. All right.
Well, I'll go back and check, and I guess I can do these retroactively. So I bought 2,000 Schwab.
Yeah, it's right here.
AQN.
Motion 24. It passed. No, sorry, that's.
No, it's motion 25. Not
25.
Passed.
Sorry. Yeah, one did not. Okay.
Oh, okay. Well, this. I guess the portfolio doesn't reflect.
So that's okay. Sorry.
That's okay.
Transactions. I didn't think about following up on that. Sorry. Good thing this isn't real money now.
Tom, I have trouble with your microphone tonight. Can you speak a little louder? Okay.
There's trouble with my microphone?
No, I just felt it's not as loud or clear as used to be. Okay, go ahead.
Well,
maybe talk a little bit louder.
Let's see here. I'm doing, I've got got this headphone plugged in, but
Yeah, that's better, Tom.
can you show me how to switch to my headphone? It says computer audio.
It's better
Well,
now. It's better now.
audio, and it's not giving me
better.
the chance to switch it here. So
Just keep it the way it is now, Tom. You sound
It's
fine
okay.
now.
It's fine. It's
Okay.
better now. Okay.
Well, my okay. Well, the when I open my laptop, it makes everything really big on this screen. So that's just the way it works. Unless I can figure out some way to make it smaller.
Control minus.
But it's not big for us though.
It looks fine.
Yeah, it looks fine. You can, oh no, not too small. Too small for us. Maybe I need to make my screen maximize. No, that's
Okay. Well, it's
That's
taking
fine.
up my
Go
whole.
ahead.
But
Yeah.
a 24-inch monitor is taking up the whole thing.
Oh,
So anyway, this is what we have. I don't know. Does anybody have any other reports they want to look at, or?
Could you look at the, could you click on the gain loss, please? The portfolio
Where is
gain
that?
loss. It's on under
Oh,
portfolio
there
at
we
the,
go.
so it looks like we're at a gain of 7%, which is pretty good considering the market drop.
what's the benchmark? Do you know?
It's Tom, if you can scroll down a little bit. No, is there down a little bit further? No, go back up. I can't remember, Jay, where there's a benchmark report. I know. I think it's.
What's it called? Club
Because
performance.
you said it's pretty good. That's why I thought, oh, you had an idea of compare 7.4 to something else.
It's
Tom, look at club performance on the left under portfolio. It's in the middle of it. See club performance, maybe it's there.
Yeah,
There you
there
go.
it is.
Okay.
it's a little bit hard to read. For
Oh,
me,
so we are.
the font is so small it's hard to read. The font is so small it's hard for.
Well, it's covering up my whole screen here, but we'll see what's happening.
So that's good. So we are beat the benchmark.
Well, the club
No,
is
we're-
minus 30, minus 34, and the Vanguard 500 is minus 25.
Yeah,
So
it's
sounds like it is.
it's
So
a bit
we're-
misleading. It's a bit misleading because if you look at our portfolio, it's and then you compare it to the S&P 500, the size of companies is a little bit different. So I've always had trouble trying to get a good benchmark to compare to. But I'm just as a general comment, I mean, the market went down quite a bit and we're still positive. So, you know, I think that's not too bad.
So I was looking at a compound probably the 3 years. Okay.
Yeah. But I mean, look at our 3 year and then look at our 1 year. So we're doing okay. And then we just kind of got hit a bit in the last couple of months. So.
Which is expected because everybody got hit, not just us.
Yeah.
So as long as our companies are still considered as a quality growth company, we should just continue to hold or maybe buy more.
And can I ask a question? We're not positioning our portfolio to withstand extremes, or right? Or else we would have invested in some bonds and, you know, some more stable type stocks. Is that correct?
No, I think most of our portfolio is pretty resilient. There's a few things like Disney, like if you go back, Tom, to the gain loss at the bottom of portfolio. gain loss.
Oh,
No,
we
up.
passed it.
No,
We passed it.
back up. Yeah, right there. Yeah.
The last
Under-
one under portfolio.
I'm not, oh, there we go.
Yeah.
So, I mean, Heiko's is done very well. Domino's Pizza, I guess, because of deliveries and so on. Lamb Research, where we got hit are, you know, Comcast, Canadian Solar, Disney because of and BJ's Restaurants, Air Lease because of the aircraft.
Yeah.
So, you know, we have, I mean, those are ones that we might want to reconsider.
Okay, I have a question. Why BJ's, oh, that restaurant, you said something about which company was it? You said
Domino's,
Domino's. Oh, Domino's was good, but
because of-
Comcast. What's wrong with Comcast? I would think because Disney's subscription went up to 50 million. I would think a Comcast will get more customers. So why you think Comcast got hit?
Because there's no sports. Don't they do the sports?
Comcast? Well, what break
Well, they
even
do
right now for
everything.
Comcast?
I mean, they have sports, but they have a lot of other stuff too, plus internet access.
Yeah.
Maybe that's a mistake.
Yeah. I think it's right now break even Comcast. It's not really like loss as like others.
yeah,
I
it's
don't know why it
possible.
would be a loss because
Yeah.
everyone's at home using it. It's certainly
Let
slowed
me
mine.
see here.
Wait, let's see. You say Domino's, if you say deliveries went up 44 for Domino's,
Yes.
what about BJ's? Because BJ's is
And-
also
And
Wait, but BJ's is a in restaurant, sit down.
I know,
all
are
these
they going to do
restaurants
delivery?
closed.
This is something we need to ask Matt because he's in a restaurant service industry and he's very familiar with the industry. And I think did he say he
Yeah.
set up the delivery last meeting?
Yeah, so they did delivery, but it's still not enough to replace all the in-house. So it's down a lot.
Mm.
But it's up like 3 times the prior delivery. So, but it's still overall negative, like 60 or 70% over last year.
And is Domino's primarily delivery?
Yeah, for
Done.
sure. So they're probably
Oh,
doing
okay.
at least okay, if not even better. Who knows?
Here's a chart of Comcast.
Uh-huh.
They were, it looks like they're pretty much tracking the market.
I don't get why. So I'm just comparing for the internet service, the subscription, Netflix, Comcast, and Disney. I try to understand why Comcast. Well, it's hard to say right now. It's just.
So if I can make a suggestion, just for the sake of time,
Disney's way down too.
let's. I think that we should look at our portfolio again and see if we need to maybe rebalance and switch out some companies with some other ones given what's happening in the market. So we should probably, I made that suggestion, but I didn't follow up from last time, that we should have a small group and just go through some of these and do a stock comparison on them, and then maybe cull the ones that are not performing and then replace them with something else. So look at the portfolio as in its entirety, rather than when we do the quarterly reviews where we're looking at 1 or 2 companies, but not comparing them to the others.
Okay, sounds good. Should we move on to the stock study?
There's a report, isn't it? Which one first? I have no. Is the
Oh,
report,
the report.
first or?
Oh, stocks, yeah.
Jane had a trouble connect to GoToWebinar, so I'm just suggest she to uninstall and reinstall, see if that works.
Okay.
'Cause-
The stock study is before the annual report, so she has some time.
Okay.
So why don't we move on to the stock study?
Okay.
What is it? 420? Who picked that date for the cannabis study?
Coincidence.
Was it coincidence? I was like,
Wait, I don't get a joke. What is it? What's 420?
420.
Google it.
420 is code for marijuana.
Oh, okay.
Well, and it was supposed to be the time that people met to smoke pot. I don't know. 4 hours and 20 minutes.
Well, is it
420.
420? Supposedly it's 420 in the afternoon, high school students in San Rafael, California.
Okay.
Okay, Tom.
Only in California.
Yeah.
So who do I
Okay.
give the screen
Well,
to?
Bernard is doing the industry review, and then Mina and I and Bernard are going to do 3 individual companies, and then we'll compare them. I'll go at the end because I've got a comparison slide that I can show.
Okay,
So I
am
think
I making Bernard a presenter?
Yep.
Okay. All right, Bernard.
I don't think Bernard has anything to show. Does he, Hanny?
Oh,
Yeah.
okay.
Oh, there it is.
Okay. All right.
Okay, so. Well, here we have, it's on the screen now. It's on the screen. So, what the hell? Oh, I'll just read this. I'll close this. And so I can
Okay.
just read what, there it is. I'll just read what's on the screen.
Yeah,
And so
just
I've
read it.
used marijuana off and on for 50 years. In the early days, I was a smoker. I'm going to ad lib a little bit. But later, I became an eater of edibles. Oh my, they blocked. Wait a minute. They covered up my screen. Just a minute. Leave webinar. No. Okay. Marijuana. Okay. Okay. I have multiple. Lately, I have multiple myeloma cancer. So marijuana helps me sleep, and in addition to chemotherapy, it helps me sleep. In addition to chemotherapy, I have to take steroids. So marijuana also helps me with pain. A marijuana plant has about 120 components. Many of these components have yet to be examined. There's potential for many diseases. They've already, like they got a very good drug component for epilepsy. They've taken it apart, the plant, and they're finding there's many components, many potentials, pharmaceutical potentials. 2 major components are THC and CBD. THC can get you high. I see it as an enhancer. It enhances your sights, your sounds, and your foods, possibly making them better. I remember the first early time I was smoking, and the first time in my life, I noticed the intricate wood grain in my door. You know, I'd walked by that door 1,000 times, never seen the wood grain. When I smoked the pot, all of a sudden, the beautiful, intricate wood grain became apparent to me for the first time. CBD is a relaxer, and it helps reduce pain, relaxation, and sleep. Giving relaxation and sleep. I like hybrid edibles, which combine both CBD and THC. Marijuana companies exist in many parts of the world, like Israel, Europe, England. Cannabis investors, U.S. and Canadian investors mainly invest in U.S. and Canadian companies are ahead of the U.S. companies because marijuana is legal throughout Canada. In the United States, it's still a Schedule 1 problem. In the U.S., but there's problems in Canada too, because they don't have many stores or dispensaries, and they don't have as high an income, and they have a lot of regulations on the dispensaries that they do have. But in the U.S., there are 39 states where medical marijuana is legal, and 11 states where recreational marijuana is also legal. The pattern that usually happens in a state is that you'll have first medical marijuana. This is something that Republicans and Democrats agree on, medical marijuana. So that comes into a state, and then like it did in California, it came in 1996. And then a few years later, they sold recreational marijuana too. So first comes medical marijuana, and then later, oftentimes, recreational marijuana. The pattern has been there's only one state where the politicians legalized it, and that was Illinois. The pattern has usually been that it's petitions. People petition their government, they get a majority of the petition, and then all of a sudden they have a marijuana in their state. But the United States is about 10 times the size of Canada. Canada is about the size of California, maybe 40 million people. So the United States, there's potential, but boy, it's slow. And okay, now I have to go down the screen. Let's see. Maybe we can go down. Oh, I can scroll. Oh, wow, very nice. Okay, but over half the marijuana sold in the world today is illegal. There's still a black market.
My screen is black. Is anybody else's screen black?
US,
I think actually the screen sharing right now is under Joanne.
Geez,
but,
mine looks very good.
Bernard just reading his notes. Yeah, go ahead, Bernard. Sorry.
Is everybody else's
I can
black?
see my notes.
Yes.
No, is yours black, Jay?
Yes.
Jay.
I can see the notes.
Okay.
But there's not much, like it's just notes. So I would just continue reading it, Bernard. Yeah.
Yeah.
I'm going to close out and restart.
Okay.
Okay. So
Bernard, I can't. We can't hear you.
okay, marijuana sold is illegal. There's a long tradition of that from the war on drugs. Well, can you hear me now, Haney?
Hello?
Yes.
We can hear you.
Yeah. Thank you.
Oh boy, I'm talking. Should be able to hear me.
Yeah. No, I can hear you now. Thank you.
Okay. Okay. Over half the marijuana sold is illegal. It's coming from a long, strong tradition of the war on drugs. Marijuana and U.S. business, there's a handicapping of these businesses. Marijuana businesses in the U.S. cannot deduct ordinary business expenses. And so if you have an expense, instead of deducting it, you have to pay taxes as if your total income, but your income, even though it's not your net income. Also, U.S. marijuana companies cannot bank. You have to do cash only. And there's another restriction too, is you can't go interstate. Like I can't take marijuana from California to Nevada. You have to keep in your own legal state. And Safe Banking Act passed Congress on a bipartisan basis, but it was not approved by the Senate. As I see it, marijuana has great potential, medical, recreational, and food. I even read a report that hemp could be used instead of plastic, which plastic does not. It will take time. It took over 120 years to give women the vote. Marijuana companies differentiate themselves in many ways. Some are extractors. Oh yeah, here it goes. I'm trying to, okay. They use laboratories to remove the desired components for marijuana plants for use in products. Balance GrowthWorks is one of these. Now here's what I understand, like with bear aspirin, it was originally came from the bark of a tree, but then later on they synthesized it and they could take it apart chemically and they could make it artificially. And then someday maybe they could take components of marijuana And sure about that. But anyhow, you'll bring 100 pounds of marijuana to one grow, and then later on they give you CBD and THC or whatever you wanted. Yes, hello. Okay. In the U.S., most companies are seed to retail, vertically integrated. You plant the seeds, and eventually you sell the pot or the products. In part, this stems from the interaction with law enforcement used to prefer and mandate that companies be integrated vertically, marijuana companies, because it made it easier for them to investigate. In the U.S., many companies are multi-state operators. They hope that by operating in many states, they can be larger and stronger in the future. This could 4 dispensaries can cost $18 to $128 million just for the license. More differentiation. Tush makes containers, safe containers for marijuana. Innovative Properties, Industrial Properties is a real estate company that leases marijuana properties to marijuana companies. Is a big help to companies who need indoor or outdoor growing facilities. This company is, I will do a stock selection guide on, IIPR. My selection guide, I researched it an F. Schwab rates this REIT as one of the worst REITs because it's overextended balance sheet. And I may not buy any more. Well, I am going to buy more. I trust Schwab analysis more than my own. But on the other hand, Zacks rates the stock a 1, the top 25% performers. And another thing about IPR, I looked it up in my favorite Yahoo Finance, and there's insider purchases in the last 6 months. And so, okay, well, we'll get to, I'm going to do the stock selection guide in a little bit later.
Bernard, your phone's breaking.
And the insider situation is 2.9%, 2.94% owned by insiders. My phone, my sound is breaking.
Yes.
Hello. Okay, I'm just talking here to the computer. I'm hoping it'll be all right. Okay, I'm enthusiastic on marijuana long term, but my enthusiasm has decreased as I've done more research. At best, most marijuana companies are small, volatile, with sales and no earnings. Even a good leave with growing sales and earnings will not let you do a stock selection guide. Better Investing does not accept the ticker. It's the wrong exchange, I think. I think it's a pink sheet. There can be great speculation. These could be great speculation investments. I know because I've owned several. I own 5 or 6 marijuana, and if somebody wants it, sometime I'll be glad to talk about them. Some of them are done very good, and some of them haven't. On the other hand, I went to Tom Thumb dispensary yesterday. There was a long line of customers, and maybe some such sales may someday be earnings in this growing industry. In this industry, they figure it's growing about 24% a year. So that's my report. And thanks for bringing up the screen. It helped me to read it. Thank you very much. That's my report. Any questions? I'll be glad to do the best I can.
What's your favorite product, Bernard?
Can you repeat that, Matt?
Yeah, what's your favorite product, Bernard?
My 2 favorite stocks are IIPR and then TrueLeaf.
No, your
and
product.
I think there's going to be
the product that you like to use.
I'm using usually edibles, gummies. I'm using gummies. and I buy them, I bought the same brand about 5 or 6 times. I'd have to go get the thing. I can't remember the exact name, but it's gummies that are both THC and CBD. That's my favorite
Okay.
product.
Well, yeah, if you find it out, let us know. Maybe we can buy their
And I also
stuff.
like this Kiva. It's a chocolate.
Oh, that sounds good. I'm gonna have to try that.
It does.
Okay, but I don't know who
Okay.
makes.
Thank you, Bernard.
Yeah,
Bernard, when it comes to time for you to do your stock selection guide, can you call in on your
well,
telephone?
thank you for the opportunity. Yes.
Can you call in on your telephone so instead of using your computer for the microphone? Do you want to try
Okay.
that?
Well, if I can, sure, I can do anything. I want to work this. I'll have to go. Let me get my phone. It's right close, and then you'll have to give
Okay.
me a number, and then I'll
Well,
call in.
sure. Okay, I'll help
I
you.
don't know the
While
number.
while
But
you're
I'll get the
doing that,
phone.
while you're doing that, we'll have Hanny give the industry. Does that sound okay?
Oh, Bernard just did the
Oh,
industry.
industry. And what are you gonna?
Mina and I are going to do 2 separate companies. I don't know if
Okay.
Mina, is
Yes.
Mina on?
Who shall make the presenter next? Mina?
Mina, yeah.
Okay.
And in the meantime, I'll help Bernard.
Okay. Mina, accept. I make your presenter. There you go. We can see your screen, Mina.
Mina, can you say something just so we can see if we can hear you? Because I think you're muted.
No, he's not muted, but his microphone is not working. Sorry, we did not get a chance to test out today before the meeting. We usually test the presenters.
Maybe we should have him call in as well.
Yeah.
Do you have that number? The phone number?
It's in the
Email, huh?
email. Yeah.
I was gonna go look that up.
Okay.
Okay, do you want, I can
Okay.
I can
Andy,
do
I make you
mine if you
presenter.
like.
Okay.
Okay.
Go ahead.
All right. Can you see my screen?
Yes.
Okay, the company that I'm going to talk about is called Afria. It's a Canadian marijuana company. I just took this presentation from their one of their industry presentations that they gave recently. So Afria is it's a Canadian company, but it's traded both on the Toronto Stock Exchange and the New York Stock Exchange, and it's they claim themselves as a global leader in CPG, which is consumer packaged goods, and I'll explain that a little bit later on, and also on the medical side. So they've developed a number of brands of marijuana products. In the marijuana industry, there are 2 segments. There's medical and there's recreational, and recreational is by far the largest, but it also has a number of regulatory hurdles that have to be overcome before it can the market can be open. So the reason that a lot of these marijuana companies are not profitable right now is because of as Bernard mentioned, the regulations in the United States that require them to be vertically integrated, and if they want to be in multiple states, they have to apply for licenses in each individual state, which is both time-consuming and very expensive, and each state has its own set of regulations and procedures that they have to follow. So most of the marijuana companies, whether they're Canadian or US, that have tried to get into the US market have lost a lot of money because of that. In Canada, there's a slightly different problem. The federal government legalized marijuana, but the provinces were not able to provide licenses for dispensaries for recreational very quickly. And so, for example, in Ontario, which is the largest province in Canada, I think we only have five dispensaries. And so it's again, it's a regulatory hurdle. So what AFRIA has done is they've focused primarily on the Canadian market because they've been able to get into the market and differentiate themselves. They have a U.S. strategy, but they haven't entered the U.S. market in a significant way yet. This is kind of the global market. So Canada is about 18 billion is estimated, which is oddly enough, Bernard mentioned, it's about the same size as the California market. So it's a lot of large population in California, and it's both adult use and medical. Globally, the market is about 200 billion. And again, if you can see from this graph or this graphic, the medical market is about 50 and the adult use is 150 billion. So, 3 times more for the adult use market. You can see some of the countries where there's medical marijuana. A lot of the South American countries, Australia, some European, and so on. The adult market is a little bit in Canada and in the United States. Now, if you think that this is kind of a passing fad, or it may not turn into a real market, I just want to highlight a couple of things here. So we don't have Jack in the Box in Canada, but apparently in California, Jack in the Box teamed up with some famous rapper and came up with this Merry Munchie meal that's targeting people late at night that have the munchies after they've used cannabis. Coca-Cola is looking at a CBD type of drink. Constellation Brands, which owns Corona as well as a number of others, also is looking at some sort of beer and CBD type of drink, and Molson Coors, same thing. So a lot of mainstream companies that are injecting a lot of money into market research and looking at how they can get into this market. So if these companies are spending this kind of money, it's obvious that there's they see a market going forward. Now, AFRIA their strategy is, first of all, is kind of looking at all of the drivers in the industry, and these are the different growth drivers. So at some point, when the recreational market opens up, you're going to have, you're going to go from illicit use to legal use. And so they're looking at different formats. How do they make sure that they have a quality product and the right price point so that they can address the recreational market? Bernard talked about the various legislation in the United States. There's 3 main acts that are in front of Congress. There's the Safe Banking Act, the State Act, and the Marijuana Reform Act. And I had posted a report on the Club Google Drive, and there's a nice summary and a chart in there about these 3 pieces of legislation and how they're different and what they address. I won't go into that here just because of timing. In as far as the medical market is concerned, they're doing they're looking at a lot of the research. As Bernard mentioned, there's a lot of medical research going on to both isolate some of these compounds in cannabis and to also look at how they can be used on the medical side. And he mentioned one of the big things is for children with what is it? I can't remember it's a condition that
epilepsy.
Epilepsy, sorry, for small children, and marijuana's proved very, useful in addressing that in small children, and then also in pain management. So what AFRIA is doing is they're targeting some of the countries where there's a medical need right now. And then again, looking at the adult use market or the recreational market in various countries. So looking at the US once the legislation is passed. So just to give you, this is again from their investor presentation. So they've done a lot of market tests and focus groups, and they've sort of branded different products to meet different segments of the market. So people that are new to the drug, and some of the using it for as a relaxation kind of thing, sort of a low cost value market. There's, I guess, people that are connoisseurs, marijuana connoisseurs, and then sort of mainstream. So in each of these segments, they've come up with different brands and different products at different price points to address these things. And just we're not talking here about sort of the ethical aspect of this. We're just presenting it in a sort of a factual way, but obviously there, some people might have an issue with this, as you would say with alcohol or some other things. So, but that aside, so this again is just showing some of the products that they've developed and what markets they're looking at. So you could see that they have a pretty good strategy covering the entire spectrum from growing the marijuana flower to different products, recreational and medical. So their strategy right now is not to enter the US market, and specifically because of these multi-state organizations, MSOs that Bernard mentioned. It's too expensive. They would have to be vertically integrated in each state, have control the entire supply chain, which is expensive to set up. So what they're doing is they're focusing on primarily the medical side of things, and they're looking at 3 jurisdictions: Canada, because that's where the company originated; Germany, because it has a much larger population than Canada, but also because they're looking very seriously at the medical side, and they can, given the regulatory regime in Canada aligns well with the regulatory regime in Germany. And as Bernard was saying, they enter a market initially on the medical side, but then as the regulations are relaxed and it opens up to the recreational side, then they can address that. And then the third market is Latin America, and again, predominantly on the medical side and a much larger population than Canada. So the problem with the Canadian market is just the size of the market is small, and then also there was such a hype about this industry initially that a lot of people got into the market, started producing plants, and then when the government rolled out the licenses for dispensaries, there just wasn't enough dispensaries. So there was an oversupply, and people couldn't get the product. So there was a mismatch of supply and demand, and as a result of that, a lot of these companies got financially were hit pretty hard. One of the big strengths of AFRIA is their cash position. So they've done 2 equity raises through just convertible notes and corporate debt, and they have about $500 million in cash. as of February, end of February. So pretty strong cash position. I don't think the COVID-19 issue is really hurting this industry as much as because predominantly their market is on the medical side, and you know, they have a strong cash position. So I think that they'll weather the storm. And then you know, the issue though with again with all of the companies that we'll be talking about today, with the exception of IIPR, which is a REIT, real estate investment trust, is that they have all invested heavily to get into the market, and so profitability is not quite where it should be, but I think that will improve as time goes on. So again, just to summarize on this company, they have a lot of cash. They're looking at how to reduce their cost and increase their profitability, and that's a huge issue in the industry. So these MSOs and multi-state organizations, because they're having to sort of replicate themselves in each state that they operate in, and they can't pass product back and forth between states and so on, that's really hurt them on the capital side. They're spending a lot of money. Afria doesn't have that issue because they're predominantly looking at jurisdictions where they don't have to set up that sort of structure. They're selling some of their non-core assets to generate cash, and they're looking at just being profitable, which is kind of rare in this industry at the moment. So that's it. Any questions?
The SSG doesn't look good. So I guess.
Can I?
Yeah. So
well, before we get to the SSG, can I ask a question?
Absolutely. Yeah.
About you said with the COVID-19, you don't see an impact because it's targeting a medical audience. But
right.
Do insurance companies cover this under medical, or is it all out of pocket?
I don't know. In the U.S., I think in Canada, it would be covered, but I don't know what the situation is in the States.
Or how about I mean, their markets are Germany, Canada, Germany, and Latin America. I don't know with it.
Yeah, so they are getting into those markets, but that's a good question. I'll try to find out. I don't know.
Because I think with the COVID-19, with people being, you know, it's being a recession, they might not spend. I don't know if there's alternate medications that might be less expensive than the medical marijuana, or that's covered by their insurance.
Yeah, that's a good question, Joanne.
Okay.
I don't know, but
Bernard should know. He uses it. Bernard, does your insurance cover?
No, but that's the U.S. This company focuses on Canada, Germany, and.
So in Canada, it's not an issue.
Okay.
In Germany and South America, I don't know what they're.
Okay.
I think they have private insurance. But.
What do you mean by Canada, Joanne? This company has two tickers.
Here's the thing about.
No, but it sells in Canada. They don't have them. Do they sell it?
in the U.S.
They have some operations in the U.S. or small, but not. I think they sell seeds.
Okay.
Sorry, Bernard. Go ahead.
Haney, what about, because what I understand, it's Colombia and South Africa South America is a low-cost producer, that they can grow cannabis much cheaper than anybody else. Is that how does that affect Afria? I don't know, but I mean, that would be something, if they're to sell into Latin America, they could have stiff competition from Colombia, which is.
Yeah, I think my understanding, and I could be wrong, but I think that
that's a good report, Haney. Thank you.
You're welcome. I think that they would grow in each country. I'm not sure, unless it's a packaged product. I'm not sure what the if they can actually transport across borders. That's another issue that I think I need to look into.
Okay, I guess we can look at the SSG now.
I didn't do an
Now,
SSG.
as far as deductible by insurance in
I
the
can show
States,
you.
well, marijuana's pretty cheap.
I can.
Okay.
So I'm having problems with making. Oh, here we go. Okay. I don't know what's going on. I think I downloaded WebEx and I think it's interfering with GoToWebinar. But I'll show you the SSG, Joanne, and like Bernard was saying earlier, you can't. A lot of these companies don't fall into the up, straight, and parallel. So it's very difficult to do SSGs, and that's why I put together a comparison chart, which I'll show at the end once Mina and Bernard go through. But here it is. I mean, it's not. I'll just take out the pre-tax profit just to show you. So the sales, I'll take out EPS as well. So you could see sales are pretty good. They're increasing quite rapidly. Last 5 years, they're about 800% growth in sales. And then you look at the EPS growth, and it's not what we normally see when we look at these up, straight, and parallel. And you'll see that with all of the companies that we present tonight.
Well, it looks like it's tracking fairly close to the sales, except for 2018. What happened then?
I think that was when I don't know, but I think it was. I suspect that was when they had the oversupply issue, and a lot of the companies were there were also a few issues with some of the bigger companies. There were CEO changes. There were a couple of negative press reports about CEOs and that sort of thing, and you know, they ended up all of the stocks, I think, took a beating in 2018.
Okay.
So how come we
So
don't
I
have
did
2019?
this. I mean, I did an SSG, and you could get it to do. So I mean, if you look at, say, if you put 30% in here, and then I did. It didn't save on. I didn't save it, but if you put it, say, about 15 for the thing is, it's very difficult to get a forecast on these things. But I just did a random one, to be honest. I couldn't find any data, so I just kind of pulled some numbers out of the air. And then looking at the if you look at the PE ratio, I mean, the average is 87, which is ridiculous. So I put 40. I'll just show you what happens. So you can, as we talked about before, you can make this thing look any way you want. Here's I took the average low of 1.9 over the last 5 years, and so you get a 3.5 to 1. But is this 14% earnings realistic? I think the sales growth of 30% is not bad. I think that's reasonable, but I just have no idea what the earnings will be, and there's not a lot of coverage on that at the moment.
Okay. I just looked at the stock price, and what I learned from Roy is when you see stock prices that are that low, it's kind of a danger area. What was the low this year? Was 195?
195, yeah.
Yeah. I don't know. And the high was 850.
Right.
It really bounces around then.
Yeah, but I mean, you can say the same thing about Tesla.
Mm-hmm.
You can say the same thing about JP Morgan.
But
everybody's been had those kind of fluctuations. Look at the oil companies.
Right.
Yeah,
So
but I
that's
think,
what we.
but I think that based on the price, like, I don't know, he would call it a penny stock.
Mm-hmm.
Yeah, if it goes under $1, then they get delisted from the exchange.
Yeah. So
So
when it gets close like that, I don't know. Roy just said that was a red flag. So that's the one thing I noticed.
Right.
Yeah,
You
I
have a
think
point to compare with Tesla, but this company has been around for what, 5, 6, 7 years of data.
yeah.
With that 5 years data, your stock price still is at under $10 a share in that kind of industry. I'm just not sure. What are you going to say, Tom?
well, I'm saying, it's anything under $5 is highly speculative. And I'm also wondering about the growth, I mean, it seems to me, that aren't people who want to use marijuana already using it? I mean, are there going to is the market going to be expanding like 30% a year from now on?
I think if it's legalized and there's
People use
like
it all the, I used it in college and everybody used it when it was illegal. There wasn't any deterrent.
I think the the feeling is that once it becomes legal, you'll see a lot of the illicit use flip over. It'll be mainstream like alcohol and tobacco. So these companies will start to benefit because they have they have the quality programs, and they have, they'll have hopefully reasonable pricing, and so you'll see the market pick up, whereas now it's underground and no one really knows how much is out there.
Well, I think in California, the taxes are so high that the legal prices are considerably higher than the black market, and a lot of people just use the black market.
Yeah, and that's an issue for sure. Is the depends on what the taxation scenario is going to be.
Yeah. But
Anyways, I'm not recommending a buy or anything like that, but I'm just
the statistics I read is that the legitimate market still industry is growing 24% a year. Eventually, possibly that the illicit market will drop wayside.
Bernard, do you mind if you
Maybe. We'll see.
you give me a call and we can try to fix your audio?
Yes.
Okay, so I just sent you an email with my phone number. So give me a call, and
Well, I'll call the number.
So should we look at another company?
All right, I'll go to
in
my
that
email.
industry or no?
yeah, Mina, I think is
Okay. Should we?
hopefully-
Okay. Kind of educate ourselves about this industry, basically. Okay, Mina, I'll make you presenter. We can see your screen, Mina. We just cannot hear you.
he might need to reinstall.
Yeah, Jane also had the same issue with, so Jane's still trying to get on GoToWebinar. She has issue.
Can Mina try to call in instead of?
Oh, we need to give him Canada number. That is oh, he said he's trying to call in, but that's a United States number. I don't know. Maybe he can use his Google number to call. Okay. So what should we do? Meanwhile, oh, there's a number on the screen. Whoever needs to call. Should we? Do you have any more?
Bernard could present his stock, but he doesn't have sound. He's got sound problems
yeah,
too.
Right. Yeah.
I'm
Right.
trying to have him call me.
Yeah.
we've never had this problem before. I don't know if it's
It might have been a update with, I don't know, maybe everybody's using GoToWebinar. And just getting overloaded. They don't have the
Yeah,
bandwidth to
I
handle
think
it.
that's a lot of it.
yeah. Jean is also having trouble right now. I'm communicating with her right now.
Okay. Bernard? Hi. Okay.
So Henny,
Yes.
what do you suggest we do right now as we are waiting for Amina to call? Should we just move on to here? Should we do the since you have the control, do you want to do the annual report?
Hello, can you hear me?
Oh, yay, Mina. Yes, we can hear you.
Okay, perfect. Let me just mute you here.
Okay. Okay. We can hear you, but we cannot see you are the presenter.
Okay, sorry, just give me. Um, okay, can you see the screen now?
Yes.
Yes. If you can just
All right.
make it a bit bigger.
Perfect.
Yeah.
There you go. Relief, naturally.
Excellent. Yeah, that's so Trulieve. Sorry for the delay, but so as Bernard mentioned, Trulieve is one of the companies we're looking at. It unfortunately it's not on the Better Investing SSG. It's not set up with the information on there, so we don't have the benefit of an SSG or doing a stock study for it. So I've just pulled some information about the company that we found. They've just announced their 2019 information, so that's kind of the most up-to-date information we have. So Trulieve is located in Tallahassee, Florida. It's the largest medical marijuana supplier in the state, and it has over 300,000 active patients, and increases that patient base by about 10% on a month-to-month basis. And they've experienced huge growth in the last few years. I kind of didn't believe it, but yeah, so it's about 419% from 2018. So. And they operate about 1.7 million square feet of cultivation space, and so they've added about 200,000 in the last in Q4 of 2019, getting up to 1.7 million. So just as an overview, they currently have 45 dispensaries in Florida, and forecasted to increase their sales by about 1.9 billion annually. In about 4 years from now. So they're expecting to do significant growth, and most of that being in the medical cannabis market. They've actually taken significant efforts in their branding and marketing to establish themselves as a medical company and not a recreational cannabis company at this time, at least. So in terms of market share, they hold 53% of, or responsible for 53% of the sales of THC concentrates, and about 6% of the dry flower that was sold in the fourth quarter of 2019 for medical marijuana. And they provide for about 80% of the active patients in Florida. So really, they do have a foothold in the market. Sorry? Hello?
I think that was Bernard, but
Oh, okay.
I'm not sure. He must be using his computer, and it's just.
Okay. So as long as everybody can hear me, so the company has performed well in the last 2 years with a significant dip in 2019. I wasn't able to find anything that really spoke to why they had such a such a decrease in value from about this time last year until August, but they seem to have rebounded in the fourth quarter, and that's due to strong sales that exceeded consensus estimates. So right now, today's trading at about $10 US per share. So it's a representation there from Bloomberg. And this is from an article that they had kind of speaking to the virtues of the company, outperformed the sector for the quarter. So just in terms of key guidances, revenues for 2019 fourth quarter was 79.7 million USD, which was a 13% increase from the previous quarter and was ahead of the estimates of 65 million. They opened an additional 77 dispensaries to get up to their total, and their adjusted ITBA is it's about 36 million for Q3, has increased by about 10 million. So management has reaffirmed guidance as a result of that for 2020, which was provided in 2018, which calls for sales and revenues to up to 400 million in 2020. And some articles I came across seems to suggest that this might be a conservative estimate, and that they're optimistic to exceed it. In terms of, so unfortunately, we'll have the 2020 first quarter results in May to see whether, they're on track with those estimates and whether they in fact will exceed them, but we'll see. So the really big move for this company is the expansion into Massachusetts, and that seems to be the company's main priority in 2020. So earlier last year, they purchased an early stage license, which is now at the stage where they're ready to open dispensaries in the state, and expect Massachusetts to contribute to revenue for 2020. So part of that 400 million is that expansion to a new market. And so what they seem to focus on with their branding to investors is that Massachusetts is unique due to wholesale ability. So given their large ability to grow, this could be advantageous for them. So they also intend to build a large facility in Massachusetts to support the operations there. And they've also purchased another early stage license in California. So as Hanny was talking about, the market there is quite significant. So if they can establish that presence, that's another avenue for them to continue growing. I did come across some causes for concern, or some apparently there is increasing competition in Florida. So Med Management is expected to open 30 dispensaries to compete with the 45 that are there for Trulieve now. So that could give them a run for their money in terms of retaining their market share. The other issue, which was interesting, is that some experts or some analysts suggest that legalization for recreational purposes might hurt Trulieve, because they really have focused their brand exclusively in medical marijuana, and so they would have to spend a lot of effort and time and funds to really rebrand themselves and have a recreational wing to take advantage of the new market and people's convenience, because a lot of medical users will use the recreational market if it's more convenient and if it's more cost effective. So they'll have to compete in that arena as well. And additionally, their costs are expected to rise. Yep.
Is it possible they could do an acquisition, because a lot of these companies are not very profitable? So if they, if there was a recreational focused company that's not doing well, they could probably buy them and then that would be an easy way to get into that market.
Yeah, that's a very good point. So absolutely. I don't see why not at all. But I mean, the other issues that, and this is actually segues into the next point, is that they're expected to pay a lot of money to really get their operations going in Massachusetts and California and get into new markets. So I'm not sure, is that a concern that they're spreading themselves too thin, or biting more off than they can chew? I guess we'll have to see. But you're right. If they focus in Florida, they could potentially purchase a recreational market and a smaller company, and then keep the brand separate. So I guess they'll have to see what direction they're going into. But those are the main concerns that were raised by them that I've noticed. And I mean, that's really the end of what I have. I know Hanny did find and put together some numbers for some better breakdown the numbers, but I'm not sophisticated enough to break them down for us. So I might just pull them up. So we see PE ratio quite low, but
so I have a slide that compares the three companies with all of these. So I can talk to that. I'll summarize it and be a bit more.
That might be more clear then. Excellent.
So I
Okay,
think
so
I'll wait for Bernard to do his, and then we can compare the three.
okay, so should I hand
Bernard's trying to call.
Bernard presenter?
He's trying to call in. So
Okay.
Is Bernard's company? Oh yeah, Bernard's company is public traded.
So Bernard is going to talk about IIPR, which
Yeah.
is a real estate investment trust that they basically lease space to marijuana growers, and they've been doing fairly well over the last few years.
So is it like greenhouses?
Greenhouses, yeah.
Do you want to
is his stuff loaded to the drive while he's calling in? Can we just preview his?
Yeah, I don't think it is, Joanne.
Okay.
Okay, I think I got it now.
Hi, Bernard.
I'm connected by phone.
Yes,
Yay, we can
perfect.
hear you.
Okay, so we're going to show you what do you need to look to show?
Well, I
Bernard?
want a stock selection guide, and then I'll talk it through.
Okay,
Okay.
perfect.
Okay.
You need to accept. You need to accept the meeting to be the presenter, Bernard. It should be on your screen.
Show my screen, or
Do you see a
connect-
little?
Well, why don't Jay or Joanne, maybe if you can just pull up this.
I'm importing right now. Hold on.
Okay.
No, just pull up
his
the.
work. Yeah.
Okay,
pull
I'm
up
not
the
an
SSG.
organizer, so I
screen.
can't.
I don't. Oh boy.
A second.
Don't worry about it,
am,
Bernard.
That's okay. Yes, things happen.
Jay's
I am
going to
importing.
pull it up.
Okay.
Importing. Okay.
Well, anyhow, I got connected by phone, but I don't see. I'm sorry, I don't have my.
Okay.
What you guys
I will show the screen. Just a second. I'm
Okay,
pulling
that-
SSG. Okay, I saw it. Okay, I make me a screen.
Sounds a lot better, Bernard.
Okay.
Oh, okay,
all right.
good.
There you go, Bernard.
If I
Okay.
get earphones, do they have to have a mic? Oh, there it is.
Yeah.
No, you sound
Yeah.
perfect. You
I
sound
have a
perfect.
question, Henny. For your company, you only show stop at 2018. What happened to 2019?
They're just it hasn't been pulled into the SSG yet, the data.
Okay.
They
Okay.
just finished reporting for 2019, and
Okay.
so it's Better Investing is a few weeks behind.
Okay.
Okay.
All right. Here you
So
go.
now the way I selected the earnings, I went to Better Investing, where you have the expectations of the members, and then I selected the ones that were reasonable. Any ones that were lower than 45 or higher than 5, and then I averaged them, and then that's how I got my earnings growth, and that's how I got my sales growth. And so that's where I started the stock selection guide with the earnings as expected by, but information expected by Better Investing investors. And that's what how I started the stock selection guide. And then I went through. Well, I don't know how to.
Okay. Want to see the next page?
Yes. Thank you,
Okay.
Jay.
Uh-huh. Go ahead.
But it looks like your sales and your earnings are growing quite well. Now, let me tell you this. So I first started this in Toolkit, and then Toolkit told me, well, you don't have enough years to do. But Core and Plus, in fact, this is the first time I've ever used Plus in a long time. Let me complete the stock selection guide. Just doing it very simply, put in what I've expected from what I saw as investors expected and as what has been reported, and it come out a buy, and with 7-to-1 downside, and
Yeah, I
So
think the reason for that is because of the high PE. You're using a 50 PE, and that's kind of the average PE that they have. But right now it's 37, so that might be a little bit aggressive, I would say. Like if
Right.
you lower that a bit, and then also the I'm not sure about the 20% earnings growth. That's
Yeah.
also,
Can
that
we,
might be.
can I make this a 15 just to see what happens?
yeah, you could change it. Yeah.
I usually for new companies, I would like to go. I think John Callison, you can add on. He just went to a class from Carol Thine. He said any companies that if some new company, she will even start 12%, right, John? And if performance better than 12 or 15, make us feel better, but we don't want to overestimate. And then plus this kind of industry and company, I will go very conservative.
Yeah.
For the earnings, what should we do? Keep a 15 or 10, or what do you think, Ken?
Well, I think 15 is more reasonable. I mean, look at, well, wait a minute, the chart went away. But it's been growing pretty good.
Yeah, these guys they're a real estate investment trust, so they have long-term contracts with their tenants, and it's pretty
Oh,
much
it's
guaranteed.
REITs.
It's a
Okay.
REIT, yeah.
Okay.
So
Uh-huh.
now, I think that the revenue is pretty safe, unless people start defaulting and because of the financial issues right now. But one thing I wanted to ask is that, can you just scroll down on this page a little bit, Jay? So in terms of REITs, aren't they supposed to show up in with isn't there another line that's supposed
Yes.
to show up?
No, that's
Earnings.
That's banks, I think.
that's banks. But you know
That's
what you
banks.
have to do with a REIT is funds from operations
Funds
should
from operation. I thought they.
Right.
I didn't
FFO.
do that. I didn't know
You
how to
need to
do it.
modify.
All
You
right.
need to
Yeah,
modify in here. Yeah. You need to modify the data.
in the
Yeah.
quarterly. Yeah.
Right. Mm-hmm.
I
I
just
thought they
treat it
had.
as an ordinary stock. I didn't know how to do it as a REIT. I'm
Well,
sorry.
you
Okay.
go to the financial data and you plug in the funds from operations into the earnings.
Mm-hmm. Mm-hmm.
Oh, I thought they. Okay, for some reason I thought they had changed the software to do that, but I guess not. I get
For
so
REIT?
for
Oh.
You
REITs,
could
yeah,
do it,
no,
man. No, I haven't heard
no.
that, but
Okay,
when I was doing PSA,
Uh-huh.
I did it manually.
Yeah. Right. Have to do manually. So yeah, you have to modify the data, quarter data.
And
So
But
let's
it's,
just.
go ahead.
if you're thinking of banks, banks have an extra line down there.
Mm-hmm. Right. Okay. So I want to say say I don't know, gross 15. I'm not sure. Also let's change the what do you want to, so current P 37, what should we, like a 35?
35 would be a good high, I would think,
Okay.
or low. I'm not sure. Yeah. What it's really been growing. 35, yeah, is a high. Average PE, you got that as 35. High. I don't. Average PE 35. Okay, yeah, that's all right. It still come out of buy.
Your forecast low price is higher than a 52 weeks. So 52 weeks is a 40, and then you're projecting 50 because you're using calculated, right? So it needs to be 1.96. So are we comfortable with 49 forecast low price?
what's the current? What's the current price?
Current price is, hold on, let me see.
75, roughly.
Current price is 73.
73. So if you take 20%, 73, 44.
About 60. Oh,
Yeah,
wait, no.
58,
Yeah.
58, 59,
Yeah.
But
59.
the range is like triple, you know, it goes from 50 to, well, from 40 to 140, you know, I mean,
Yeah.
it's really volatile.
It is. Yeah.
So now it's coming out of the hold.
Well, it's 2.8 to 1, so I would, you know,
We have
that's
not
all.
changed the low price yet. What if we just say, okay, say 40 is the, yeah, I don't know.
No, it was, well,
why
if
are
you
we
take,
thinking
if
40?
I don't know.
no, if you take, well, put it in at say 59, see what happens.
Yeah,
Oh,
So that's 20%
oh,
below.
that's 73.
oh, okay.
Yeah, it's 4.8 to 1. So, okay.
They even pay
And I
dividends?
think you're being very conservative, Jay, with like PE of 35 when the current is 37. So I think that's good. So there's no
Also
PE
the
expansion.
projection. Yeah, the projection here. Another thing is that we really need to modify this data and the earning per share to be the funds operation. I don't know would that matter.
How do we do that?
Oh, you just modify the data. Okay. So you go quarterly
You have
data, and then
to go to the annual report or whatever and get the funds from operations.
right. Yeah, change that. Change the data. I don't think it matters that much. Right.
Look at
if we
chart.
change.
My God, it's going up like a rocket.
Wait, sorry, that's not the company. This is the company. Yeah.
This is different. This is not IIPR.
IIPR. That's our IIPR.
There's IIPR.
Yeah, IIPR. Okay, so it is. I'm not sure. Do we want to try read?
Well, if you wanna make me a presenter, I will show you the metrics that I came up with. Just one second.
Okay.
Okay, so oops. Can you see the screen?
Yeah.
So what I did was I just I compared the three companies. So this is TrueLeave, IIPR, and Afria. And then here you have their you have their market cap. They're more or less pretty close. And then the 52-week high and low and the current price. So Tom, you're right. I mean, Afria it has the same market cap, but the stock price is much lower than the other two. And it's 57% below the high. So oops, sorry. And then earnings per share. So TrueLeave is the best of the three in that. PE ratio. Again, TrueLeave has got the lowest PE ratio. Price to sales trailing 12 months. Afria and TrueLeave are pretty close. IIPR is higher. Price to book, again, Afria is lowest of the three. But I mean, IIPR 1.74 price to book is not a bad number. And then evaluating management, you can see that TrueLeave is actually doing quite well relative to the other two. So return on equity, 92%. Return on equity over the last 5 years, 5-year average is 81 or 82%. Net profit margin 70, and net profit margin 5-year average is say 56 roughly. They do have a lot of debt, and that could be because of the licenses that they just purchased for Massachusetts and California, and the fact that they're they're investing in extra growth and dispensaries and so on. So their debt to equity is a little bit high compared to the other two. But overall, they TrueLeaf is, looks like it's the best of the three.
There's a question from audience from Susan was asking, the debt is high. So should we take a look at their cash flow? So I want to kind of make sure they can maintain
Yep.
their business able to pay off the debt.
Yeah.
Do you have SSG?
I don't have the, let me,
Let's see, what's the cash flow for?
oh, it doesn't, okay, we'll have to go to, it actually doesn't show up. TrueLeaf doesn't show up on the SSG.
Oh yeah, because it's a Canadian company, right? Yeah.
No, it's an American company, but for some reason, it doesn't show up.
Yeah, I think it's a pink sheet.
Mina, it's an American firm, right? TrueLeaf.
Yes. The headquarters in Florida.
Yeah. So I'm not sure why they don't show up on the stock
So
selection.
I have another question about this company, the Bernard's company. Can you look at my screen for a second? And they did not have any debts the last 3 years, except the last year. What was why the debt went up 2018?
Are you showing your screen, or am I?
I'm getting it. Just a second.
Oh, okay.
Oh,
yeah.
I have that. This is over the counter.
So what happened to 2019? What did they do to make the debt went up 27%? Do you have any idea?
I don't know. I guess they had to borrow money to buy it. Maybe it's 2,000 acre plot of land or something. I don't know the details.
Okay, you did not know. Okay.
No.
The purple line is the cash flow.
I think traditionally REITs have high debt. Yeah, I would be really surprised a REIT that didn't have any debt.
So can we even compare the IIPR to the other two? They're a REIT and the other two are
individual company? Yeah.
Yeah.
Producers.
Well, you can. I guess you can compare them just on sort of on the the growth and the metrics and so on, the stability of their cash. But yeah, you're right. It's not a straight apples to apples. So I think, like, my 2 cents on this industry is that a lot of the growth is going to be determined by regulatory issues, and I'm just wondering, given what's going on right now in the economy and how companies are or the governments are trying to start the economy back up and so on, is marijuana legislation, is that going to be top of mind? I suspect it's going to be on the back burner for quite some time, and until they deal with more pressing matters. So something like IIPR that's established, and the same with TrueLeaf. I don't see a lot of growth going forward until things settle down a bit, and governments get they start to look at the regulation. So
well, my take is that none of these are like traditional stocks and investment clubs look at. I mean, they got such short histories, and you know, they're just so volatile that it, you know, it's just kind of, they're all so highly speculative. I'm just kind of wondering if it's worth the effort.
Well, with the REIT, by the way, I think we didn't. It's a higher. The historical sales are certainly higher than 15%, and the historical earnings are higher than 15% on this on HIIPR. But
I kind of agree with you, Tom. I think it's, you know, we did it as a, to look at how we could study something that maybe didn't have a lot of data on the SSG. So we looked at other metrics and tried to get a sense of some of the you know, the issues that the industry is grappling with. It's a younger industry. So it's more speculative. You're getting in on the ground floor, but it's also risky as well. So it's not a traditional sort of company that we look at that's well established or has high growth or what have you. So there's a lot of uncertainty surrounding this just because of the regulations and you know, how they're going to transition. And you know, also given what's happening in the general economy right now, I think that's an added sort of complexity that it's hard to get visibility on these.
Yeah, well, even established companies. I mean, you know, something like Air Lease, you know, it's an established company, but we don't have any idea what's going on with travel and airlines and everything like that. It's just, you're so much uncertainty.
But for Air Lease, it's a temporary though, Tom.
Well, but he was just speaking about uncertainty. I was just, you know, picking an example of an established company that, I mean, you know, the whole world is uncertain.
Yeah, I think to Tom's point, we do, as the following better investing fundamentals, this isn't in alignment with better investing fundamentals, but it would be something like what Roy would call a Las Vegas stock. I mean, that you're willing to take a risk on it, but it doesn't follow our fundamentals. So, yeah.
Because
I mean, I'd like to.
is it because there's no long enough history,
Yeah,
or
there's not long enough. I mean, one of the basics is the 5 years.
The fundamentals, yeah.
Yeah.
Doesn't have 5 years of a history, and also the fundamentals just.
then why do we study it? I mean,
Well, because
if that's going to be one of our criteria, why even pick a stock that's going to have less than?
I think because they, as Hanny said, that it was to study how would you study stocks that don't have. I mean, they're not.
It's got 4 years. It might not have 5, but IIPR has 4 years.
Yeah. I mean, but there are stocks that are out there that don't have like value line assessments, aren't on the SSG. I mean, so where do you find that information to support your stock study? So that, I thought that was interesting how this group went about doing that.
Yeah, the only downside to that, Joanne, was, you know, typically you can study a company in a very short period of time. It doesn't take that long. I would say that, you know, it took quite a while to dig up some of this information, going to different sources, reading different things. So it was very time consuming, at least from my perspective. So if you have a value line or a Morningstar report and you know, you have SSG data, you can pretty come to an assessment fairly quickly of whether it makes sense or not financially and whether it's on sale or not. This took us a while and we're still not really certain. So
Okay.
I want to mention too, Zacks raises a 1. Zacks is a pretty important earnings predictor company. They rate IIPR a 1 as a top 25% performer.
yeah, so the thing with Zacks is that when those ratings one and twos are related to the earnings revisions. So they look at what analysts are saying about the earnings, and if they revise their earnings up, they'll then the stock price usually does well if you have positive earnings revisions. And so Zacks looks at a universe of stocks, I can't remember how many, and they divide them up into certain tranches, and the top, say 300 are ones that have had the best sort of earnings revisions. The problem with Zacks right now is there's so much uncertainty. Like, no one knows, as Tom was saying, no one can guess what's going to happen to the airline industry a year from now. Are we still going to be traveling? Do people, are they going to feel safe jumping on a crowded plane to go somewhere if they don't have to? So a lot of the earnings estimates that are coming into Zacks are somewhat suspect. So, I would wait until some of these companies actually announced earnings and then see how they did. Because I mean, even I listened to a bunch of Zacks analysts, and they were all saying that the Zacks rank is right now, it's not something you can sort of, you have to take it with a grain of salt, because they're not getting very good data from analysts. Everybody's revising, people are not guiding in a lot of cases, or they're saying we can't give guidance going forward for the next whatever time period. So
we have about 20 minutes left. Should we go to the annual report?
is Jane on, or?
Jane, no, she's not. She's still trying.
Okay.
She's
Which
still.
annual report?
We have two, right? There's
5.
1.5. There's one
Base.
CSIQ.
CSI,
I would
thought we
love to
sold
hear
5.
CSIQ, but she
Oh.
still tried to. She uninstalled, reinstalled, but still doesn't.
Did we sell 5?
Well, we
thought we-
sold 5. Sold 5, yeah.
Sorry?
Oh, wait, did we sell 5?
yes.
I think we did. Yeah, because I was wondering, I thought we sold it, so I was wondering why it was on the agenda, but
Oh, we sold 5. Oh,
yeah.
okay.
Yeah.
Oh, yeah,
So-
we sold it January 21st.
Right.
Okay, we sold 5. So, Matt, do you want to do the education topic about discounted cash flow?
Is he there?
Muted.
Or we can just finish early.
Yeah, we can always finish early. That's
What a
another
concept.
option.
So,
I don't
Matt,
think anyone's
it's
care
your
about
call.
discounting cash flow for the next 22 minutes.
What?
What did you say, Matt?
Kind of cash flow analysis sounds very dry.
Yeah.
I don't think anybody wants to hear about discounting cash flow after learning about marijuana for an hour and a half.
I know.
Got me excited to go to the marijuana store. Jeez, guys.
Maybe Megumi could give us a quick overview of her trip to Spain.
Yeah, I was in Barcelona until the 29th of February. It was a good time, but the plane was empty coming back, and the day before I left, I was in a 99,000 person stadium at a football game. So if anybody has COVID, I probably do. Although I'm asymptomatic.
Well, it's a good thing we're on video.
Yes.
So.
Yeah.
Okay. Well, Jay, do you want to open it up to our guests and see if anyone
Sure.
has any comments?
So, should we stop the recording and then open the mic to the guests?
Sure.
Okay. All right.